Hello? Oh my goodness, I've been talking to myself for the past 5 minutes. Oh boy. Oh brother. Okay then. Hello. Welcome in guys to another live stream. Hope you guys are doing a good morning. Having a good morning and okay, let me summarize what I said. I've been talking for the past 5 minutes nonstop and I guess my mic was somehow muted or switched to another device, and I just fixed that. Thanks for letting me know. I would have gone on for another 5 minutes probably without realizing it. I appreciate it. Okay, so as I was saying, a few things. First things first, welcome into the stream. Appreciate you taking your time out to be here. It's Friday, and it's the end of the trading week. This week has been a pretty good week so far. No red, just all green. Almost $11,500 in profits. Of course, there are some trades that we need to close out, and we'll be doing so today. That's a little bit of a summary of that. Discord has been popping off. Lots of people profiting off some plays that they took with Disney and also SPY. Really nice job from the team here. Keeping it stable, keeping it patient, and waiting for these opportunities to, take the risk positioning to their advantage. So I like seeing that. Team is really doing well. And, we have a really successful bunch of stable traders on our community instead of, 1,000 different members who are constantly shouting different things. Love that. And I was just going through the macros. Next week, remember, is 8/19. It's going to be OPEX. OPEX is the options expiry, which is going to pretty much categorically explain a lot of this unwinding of gamma that market dealers have been forced to take, going from short gamma to long gamma and adding more exposure to the upside. Now they're probably in a position where they have to start to wind back before they get into this OPEX week where majority of options contracts are going to expire. So having said that, this next week coming up, today might be a catalyst to head into that week. And as you have been following along with the live stream, if you've been following along all through this past 2 weeks, we've been calling for 41.40 and then 42 and then 42.34. It's perfect how we've got there so far. And now the next level is going to be 4,300 or 43.30, this region right here, right? And as long as we can hold above 4,200, this should be a pretty, okay zone for us to kind of clinch 4,300. But I suspect that between here and here, we're going to see some unwinding of positions as people start FOMOing into the market. So as you see, retail traders, or as you see amateur traders start to take upside positioning to cover this gap, institutions are going to be positioning themselves for exiting this long gamma positioning over here. And they will be unwinding all of their positions to all of the unsuspecting idiot sandwiches who are waiting to take upside positioning here. And you can see that momentum is kind of starting to fade post the CPI and PPI numbers, which came out yesterday, day before yesterday, which were obviously a good indicator that inflation might be temporarily cooling off, as the CPI and PPI number came out hotter than usual, right? So I think that here we have to be extremely careful. But a hold above 4,200 is good news for us to set up a possible rally to 4,300. But here's the issue. Number one, the risk to reward ratio to the upside sucks. Okay? The risk to reward ratio here sucks. So you would be finding yourself taking a trade above 42.34 and really just only playing it up to 4,300, which is somewhere around here. And if you were to go risk off at 4,200, that would work. That would give you roughly a 1:2 risk to reward ratio on the S&P 500, which you can set up to be successful. Okay, don't get me wrong, based on your risk profile. However, the upward momentum here is likely to be very sluggish. We have seen volume cascade and really drop in the past couple of days, which shows that there is either a reversal approaching or there's some kind of a move that's approaching that's not really going to be digested in the right way. Okay. So a pullback here would be warranted, but I would rather the pullback happen earlier than later. And one of the pullback levels that is possible is going to be 49.70, which is like all the way down here. I'll kind of these two levels here. And that will still set us up to bounce into 4,300 in the next swing up. So From a technical perspective, I feel like everything is aligned here for a quick rug pull to create some liquidity for the next run. Okay, and that's just the situation on the S&P 500. Now on Nasdaq, we have a little bit of a situation that's more interesting because we rejected perfectly at 13,559 or 13,560, which I was speaking about all the way through. You guys, if you guys have been listening to the stream, right, you can go back and look at all the videos. But the Nasdaq is showing a daily pin bar. Daily pin bar. S&P 500 it kind of showed the pin bar too, but let's see if we can see a reversal in this region back down to these highs over here, 4140, 42, 4170, these two regions. With the Nasdaq, we're looking for a pullback all the way down to 12,814 or 13,000, basically 13,000 or 12,814. That's the two levels. And then, you know, that might maybe cause a ruckus for some bear trapping. Once everybody starts to get overly bearish and call for doomsday, like, oh, we're going to go all the way back down. And then everybody starts with that kind of a analogy, which I think that has been the case for, what, the whole of past 2 weeks, right? So if you realize the past 2 weeks, everybody's been like, oh yeah, we're going to reject here. We're going to, reject here and then go all the way down. And S&P 500 is going to go to 0 and Nasdaq is going to go to 0. All the Twitter warriors, your fin gurus, right? All of your TikTok people, all of your, the chief economists of TikTok, as I like to call them. They've all been like overly bearish, right? And the market's response has been, oh yeah, okay, see what I do. And we've been climbing and climbing and climbing. And all of these shorts have just been getting gobbled up, right? The more shorts that have been coming into this market, they've all been just smacked around, right? And now when we're getting into a technical breakout, heading into OPEX, this would seem naturally like a great spot for market makers to pull the plug. That means once everybody switches over from the bearish mentality and then they start saying, oh, hey, you know what? I didn't really mean what I said, man. You know what? Now that we're broken out of this technical breakdown, you know what? I think we should go bullish. We should go bullish, Chad. And now I am almost 100% sure that once everybody starts getting overly bullish, all of these Giga Chads and TikTok economists are going to see a rug pull. Because the market never does what you want the market to do. Let's just get that straight, right? The market's always going to do the opposite, and you have to be ready to catch the clay vase, okay? Because it's about to break, all right? So it's really interesting to me that, obviously people are going to start to get super bullish here, and I know like where the market dealer positioning is in terms of gamma exposure. And where they're pretty much going to get trapped. So I'm fully expecting a rally up into 4,300 to trap as many people as possible. Or if we don't rally into 4,300, then a pullback down into 4,140 or 4,170 to trap some bears. So trap on both sides, more than likely, okay, heading into OPEX week. And that is what you have to expect next week. In this kind of a market where we are right now in the technicals, next week is setting out to be a week that you just take off from trading. Okay, this is my honest opinion. And I will cover it. I'll cover it Monday, Wednesday, and Friday next week. But I will tell you that next week I will be taking very little trades because with OPEX week and then everything and on tentatives where we're trading at such a key pivot point, let me tell you that we are likely to chop back and forth a lot. We'll trap some bears, then we'll rally. We'll trap some bulls, then we'll fall. Like that's what's likely to happen. Okay. In next week's OPEX. Now, I don't think I need to cover anymore why the rally happened. We all know the why the rally happened. It was a combination of too many shorts at the same time. Companies covering buybacks. After the earnings season, companies have been buying back at a record rate. And as I told you, and I mentioned that this year we're on track to do $1.1 trillion in buybacks, right, from corporate America. And that's adding obviously fuel to the fire for the rally, right? So there's a lot of things that are contributing to the rally. But what's important here is the market's not going to do what we think it's going to do. And one of the more important things that I wanted to cover is the bond market development over the past 2 days. And TLT here, which is the fat tail of bond market, 20 plus year to 30 years of the bond market. So this is the long tail, the fat tail of the bond market on the right side. we're seeing kind of a yield spike. So people selling bonds, and this is a signal that the Fed is going to continue to hike rates, okay? Because as they hike rates, that erodes the value or the yields of bond returns, and that's why people sell bonds in anticipation, okay? So it's very interesting because it's contrary to what CPI data is telling us, and I hope that you guys are understanding so far. But the bond market is signaling that we're going to, pretty much have another rate hike. Or they're pricing in the fact that, the Fed is possibly going to change to a hawkish tune rather than a dovish tune, okay? Because yields are starting to drop. Sorry, yields are starting to get higher, not drop. Bond prices are starting to drop. And remember, I've already mentioned this. Bond prices, when they head down, right, then yields start to head up. Right? Yield goes up. So because they're inversely related, right? When so let me get into this a little bit so that you guys understand this, because I feel like this is important. The bond market is a very interesting market because it is the credit system of the economy, right? It's a credit system, okay? And if you can borrow a lot of money for, if you can lend a lot of money to the U.S. Treasury, that means you have billions of dollars sitting, right? You would want the highest return for it, right? But if I told you that the return for your investment is going to start to drop, you're going to sell your bonds because you're not going to want to hold your bonds through a turbulent period. And that's exactly kind of the explanation here on what's going on with the fat tail. Because the fat tail, or the 20+ year bonds to 30+ year bonds, they demand the highest yields. Okay, the yields of these bonds are typically between the 2 to 3% rate. Okay, and if there is a 50 basis point rate hike or a 75 basis point rate hike, right, it erodes your return, and a more sensitive approach compared to a bond that is paying, let's say, 0.5% of return, right? If your bond was already paying 0.5% return and then it erodes, you weren't receiving much to begin with, right? But when you're receiving 2 to 3%, these are more sensitive to interest rates hikes. And that's just such how the bond market goes, okay? So you have to understand that piece of fact and why I'm kind of covering this. But good thing is that the bond market is kind of bouncing here pre-market, so we'll see exactly what happens because we haven't really technically broken down into a downtrend just yet. Okay, we need a break below 113.68, which is this level right here, in order to really get into a downtrend of some sorts. Here we could still be channeling, and then rally. So we need to kind of break down and then retest this and then start heading lower if we indeed feel like the bond market's gonna sell off here. But I wanted to highlight it because yesterday we got a little bit of a sell-off in the session, and that was interesting. So it's important to cover these things. Once again, guys, appreciate you guys taking the time out to be here. Remember to take some time to subscribe to us if you haven't yet, and like this stream. Liking the stream helps me out tremendously because this video will be shared with other people who are looking for similar content. We want to help as many people as possible break down these markets, and if you find these things helpful, then yeah, just leave a like behind. I truly do appreciate your time and your commitment to attending these. Okay, so now we covered the macro, we covered the technicals of the indices. IWM here as well, Russell 2000, very bearish. And I've been mentioning very, very closely that these growth stocks have the most upside, because there's been suppressed in terms of valuation for so long that now we're seeing double time exposure in them. And so you can see a huge rally in the IWM here. And I think that, there is a possibility that we pull back here down into 190. But then when we do come down, it's a great time to start taking some upside exposure probably. I will be looking for that trade very soon. Also, very quickly, I'll just cover the VIX before we move on. The VIX continues to head lower here. We kind of broke down from this, big upward sloping kind of pattern. We are in the safe territory right now. As long as we get stay above, as long as we stay below 2142, volatility should continue to drain out of this market. And 1876 is going to be the next pit stop for the VIX, and then $16 down here. But we should have some snap pullbacks along the way on the VIX. So that means volatility should come back a little bit, which is good because we've been on a downtrend on the VIX for a very long time, which is normal, by the way. The VIX is meant to go down or stay down at a very nominal level for over a long period of time. If you look at the VIX's distribution is typically around $9 to $10. That's the average mean. $16 and $15 very common. These, as you get higher, this becomes outlier levels, and that's the reason why they are red, right? Okay, dokie. So now let's look at big tech. That's the next thing, right? You want to know how this market's going to move? Look at the big tech. Look at the biggest market caps because that's where you'll get your answer, right? So with Microsoft here, we saw as one of the members on our Discord pointed out, a daily bearish engulfing candle, right? Which is, it could or could not mean that we're going to head down further or reverse here a little bit. Reverse course a little bit. That's some bearish momentum facing in the market here. And of course, it would also line up with this kind of trend that we're facing here, or rather this down trending market that we're trying to get out of over here. Will I be taking exposure on Microsoft to the downside? I will only take exposure on Microsoft to the downside if I can find that cadence from the S&P 500 and Nasdaq. That's the only case which I will do that. You don't want to go blindly short Microsoft here at a pivot point without waiting for a confirmation. If I have cadence that, oh, the market's starting to fall here and I see Microsoft falling along with it, sure. Then I might take some exposure, take a day trade, play it down into 281 or 280, and that should be all it. Just play this downside here. And then watch right at 280 to see what happens next, because there is likely to be some kind of fight or a tussle around 280 between bears and bulls. Apple in a similar case. And Apple is obviously a bit more interesting because it has a gap to cover up into the upside at 177. And it's sitting at a pivot point at around 171, right? So once again, same thing here. Apple can keep going further up, and you don't want to try and catch this. Just the same way you don't catch a falling knife coming down, you don't try to catch a hot air balloon going up, okay? Because you're always going to miss it. So there's no point to try and short Apple here for whatever reason that you think. Just wait for the confirmations, right? Wait for it to wait for price action to form lower highs and lower lows. Then you're going to get your confirmation, okay? Google as well, right? Look at it. Breaking out of this, or rather attempted to break out. That was actually this 122 is the level for it to actually break out here. Many people think this is going to be the level here for a bullish breakout at 120. That's not the level. This is the level up here. 123.11. That's bullish pivot for Google. So a lot of people would have got trapped into this, what they think is a local bull pivot, but it's actually not. The real bull pivot is here, up here in 123.11. That's a dual zone which we need to break out of in order to achieve the higher levels here at around 125, and then after that 130, and so on and so forth. So with Google, we're also going to be watching this closely because if we do start to break below, let's say here 115.76, which is the local low, then we can take some short positioning down into 112 or so. 112.74 there, right? So there's a lot of trapping going on here. From what I see, just from positioning wise, a lot of trapping going on. And, I really hope. How many of you find this kind of stuff helpful? So, I don't know if all of you have been listening since the beginning, but if you have been listening since the beginning, how many of you find this stuff helpful? Like me guiding you through the market like this, where, a lot of people might be seeing bunny ears and like, hey, yeah, we're going all the way to the heaven and nothing's above it, right? It's truly important to do a comprehensive breakdown of the market sometimes. And I'm not saying that I'm going to be 100% right about this, by the way. I'm just saying this is what I see from the probabilistic and, the educated guess kind of scenario. And I think that's important. Okay, so from the major big cap, that's what we see. Possible fake outs. For today, I'll be looking at a specific sector to trade on together with the team on Discord. I'll be posting on Discord later. And that's all I have for you guys today here. Any tickers that you guys want me to break down, please go ahead, put it in the comments. How are you guys doing? Who is here right now? I would love to hear from you. Once again, don't forget to subscribe and leave a like if you can on this stream. I truly appreciate it, taking your time out to be here and being consistent. If you missed a bunch of what happened, please refresh the stream when it ends and then forward to around, I think, 6 minutes, because I think there was some sound issues in the beginning and I was talking to myself for a whole 5 minutes on there. Yeah, I'll wait another, like about 1-2 minutes to see if you guys have any ticker breakdowns that you want me to do. Put them in the comments and I'll get to them right now. And if not, I'll end the stream right here. Also, if you have any questions, go ahead, put it into the comments. Tesla, okay. Let's go look at Tesla. Teslita. So, what's up, Eric Jimenez? Welcome in. BBBY. That stock is 50% short float. Well, I'll go over BBBY in a second. I'm also looking for a position on BBBY, but it's going to be on a different scale. I'll explain why in a second. Okay, I'll go through Tesla first. Okay, so I think some of you attended the stream all the way through this week, and a lot of you were, talking about bullish Tesla exposure. And I was telling you guys, I think it was, I'm not sure which day of the stream. I think it might have been Wednesday. I told you guys that I don't like the upside exposure on Tesla. If anything, the downside exposure is better. And that was on Wednesday. And that's purely because this thing has been chopping back and forth like a yo-yo, right? Now, the key pivots for Tesla are 936 and 842. We covered this on Wednesday's stream. Anything in between is going to be back and forth, back and forth, back and forth, right? And we had a ascending wedge, but now this is now falling into a kind of, it's kind of forming into a flag pattern. It's a flag pattern. Okay. And if we are following this flag pattern downwards, then we are likely to come back and retest this dual zone, which is right here, or this demand zone, whatever you want to call it, down over here at 820. But we have to break 840 first. So the simple way to play Tesla, if you really, really must play this stock, is you want to definitely wait for rejections of 867, which is where we are pre-market, by the way. All right, we're gapping up pre-market. If you see rejections, strong rejections off this level today with pin bars or any kind of a bearish candlestick pattern, right, on the 15-minute chart, you want to do the intraday time frame, so you really want to go on the 15-minute here. You see rejection, and you really, really want to play it, then I would wait, first of all, for the break below yesterday's low, which is this right here. Okay, so first things first, break below 857 or 856, okay, to be absolutely sure. And then you can play 840 puts, right? 840 puts would be a good day trade / scalp. If you want to play the 0-day expiry, excuse me, if you have experience doing that, I would say it would be a great payout if it can capture that momentum to the downside, okay? If it doesn't, then it's probably going to chop sideways the whole day. That's what it's been doing for the past, like, couple of days already, all right? So you really have to be careful, all right? Now, if it does break 842, then we are likely going down to 820, okay? And if you want to see how far down we can go, then you can drop this fib extension down here. You'll see that 817 is the first level here. 825 first will be a bounce, and then we'll see 817, and then 803.80. So these are the levels on Tesla for today. That's downside bias. Of course, you can do an upside bias scenario as well. But is that likely? I don't know. I think if you want to go bullish on Tesla, you really have to break like 894, 895. And I just don't see that happening today. I will be very surprised if we break 895 today. And that will be very bullish if we break 895. Like that would require some news. That would require some external, factors. So that would mean that Tesla would rally all the way up here and then break out. And that would send us up into 936 back again. But obviously, if it breaks out like that, it's going to pull back and then get up there slowly, not immediately, right? Nothing moves up in a straight line. So yeah, pretty tough to call it on Tesla. But my bias would be to the downside, and it's very simple. You see the rejection at 867, wait for the break of 857. Make sure that you are looking for that momentum and volatility break, and then you can play 840 or 830 puts to capture your volatility and gamma exposure. Okay, is that helpful, Lady Rivero? Okay, great. Okay, so then Eric wanted me to go through BBBY. Okay, so now this stock has a 42.48% short float. Okay. And it's interesting because I think sometime last year this stock had a similar squeeze. Yep, it had a similar squeeze. Let's look at the weekly. Yeah, you'll see. So last year this stock had a similar squeeze. It kind of had an initial pop off and then a pullback and then a big squeeze up into the 50s. Now, if you want to get exposure on this trade, now, by the way, first things first, above 30% on short float, it already opens this stock up for a short squeeze. Okay, so above 30% above 30% on the short float means that there's a possible short squeeze in motion. Whether it happens is a different thing. Okay, but here's a couple of things that you should be really extremely careful about. Number one, the options chain is at 200 to 300% IV. Okay, that means that this option chain is overcrowded. Forget about overcrowded. There's no space in this option chain. That means that if you're likely to buy a $14 call, $16 call, $12 call, I don't care how out the money it is, you are very unlikely to make money in the derivative in this stock. Okay, very unlikely. And not only that, you would be overpaying grotesquely for those positions because the implied volatility is extremely high. All right? So you need to flip around and play the other move, which is, number one, either you sell options, okay, which means you're going to sell puts. If you're bullish, you sell puts, right? You can sell like the weekly expiry puts. You can sell like $8 puts. You can sell $6 puts, right? And those will net you really good premium as well. Right? If you sell $10 puts, then you have some balls of steel, but I don't recommend selling $10 puts. I would do like at least $8 or $9 if you can, right? And you really want to be really careful because you want to monitor that position, put a stop loss on it as well, okay, if you're selling. With IV so high, you want to be on the sell side of option chain. You don't want to be on the buy side, okay? That's strategy number one. How and what to sell and all that, it's too much for me to cover on the stream. Either DM me on Instagram or join the Discord, ask me the question. I will gladly answer it for you and give you pointers on what positions that I'm taking, and I'll tell you, how to go around playing this. Of course, the other way is buy shares. Okay, so there's two ways. That's it. That's all I have to cover on BBBY. Okay, which sector will you be looking to trade today? What do you think about the semiconductor tickers? Out of respect for the members on Discord, I'm gonna share that idea with them because if I share everything on YouTube, it's not exactly very conducive for everybody. There are just certain things that I will guide you on the stream, which I've given you a full comprehensive breakdown of what I think. But obviously, if you want to get the insights on what we're actually trading, I suggest you join the community because it's not just so simple where I can just tell you what I'm looking at and what I'm going to be trading for the day. Because there is an entire explanation that I'm going to be giving them pre-market right now. So my recommendation is either join the Discord and find out, or just find out what we traded on Monday, and that will be easier because then you can see how I'm thinking about it, or you will see it on the Excel sheet anyway. We keep a very detailed log of what we're trading. So, but that's all I have for you guys today. I appreciate you guys taking the time out to be here. I hope you understand that I can't share everything that I want to trade and I want to do on the stream, because if I did that, then what's the point of me having a community at all, right? So if you want to be a part of the community, then join the community. It's very little money to invest to be around serious traders, and also to invest in yourself, number one. Number two, there is no way that you won't make money, because it's worth a lot more than you think. The amount of stuff that I have built into this platform, it makes it so that you don't need anything else. Everything that you need is here. You have things from potential setups. You have things from options flow that's proprietary. You have literally bots that are going to help you, get everything that you need. Even the news is here. Every single thing that you need is here. Not to mention an entire library of resources, a huge library of resources and books that you can read at your own leisure, right? And a curated snipe list every single week. And any trades that or most of the trades that I take are here, right? So yeah, it's a lot of value for you to, to look at on the Discord. Either way, I hope that I see you there in the future. If you don't decide to be there, then continue to watch these live streams, and there's a lot of information that you can action on here already. So I'll see you guys on Monday. Thanks, Mr. Robot. The Discord is more than worth you all. Awesome. I appreciate it, Mr. Robot, and thank you for the kind words. I'm guessing that you're one of the members. The best thing about the Discord is the community you get to learn from and with. I completely agree with that, because we don't have many we don't have people who are like super edgy and constantly trying to itch to get into things, which I really, really super appreciate. Oh, hey Toby, what's up, man? Okay, cool. It's Toby. Alrighty, well, that was a super long stream. I hope you guys had a good one. Friday, fun day. Gonna get on the Discord now with the team, and I'll catch you guys on Monday. Have a great weekend. Take care, and I'll see you guys for OPEX week next week. So keep it real, and peace.